Hello students, welcome. With this video we'll start a new chapter titled Adjusting the Accounts. In the previous two chapters you have learned about how to analyze transactions that happen throughout the organization, and in the second chapter you have also learned about the recording process. You have learned about journal, you have learned about ledger, and you have also learned about trial balance. So in this chapter, which is known as Adjusting the Account, we will learn about how certain accounts needs to be adjusted, why they need to be adjusted, as well as how we can adjust those accounts. So don't worry, we'll learn them step by step. So first of all, what we are expecting to learn from this chapter. So as you can see, in this chapter, we will learn about accrual basis of accounting. Don't worry if you don't know what is the accrual basis of accounting. We will learn this in this chapter step by step. Okay. We will also learn about how to make adjusting entries for deferrals. We also learn about how to make adjusting entries for accruals. So these are the things we'll learn about in this chapter. So at the end of the chapter, when all the video from this chapter will end, so you will check yourself whether we have achieved these 4 broad objectives we have mentioned here in this slide. So be with me. So in the first video, it will be a very short video, and in this video we'll talk about 2 very important assumptions in accounting. As you can see, time period assumption and going concern assumption. Assumptions are something you assume to prepare accounting record well, and after a particular point of time, if these assumptions become very popular or useful in accounting, they are accepted by the accounting regulatory bodies or accounting rules and regulation setting bodies, which we talked about in chapter 1, right? So in this chapter or in this video, we'll only learn about 2 very important assumptions of accounting. So let's start. But before going to the assumptions, let me ask you a question. As you can recall, in the first chapter, you have learned that companies have to prepare financial statements to know and communicate their financial performance to other related parties, right? So at the time when you learn about these things, do you have any question like, okay, I know that company have to prepare financial statements, but after how many times or how many times a year they prepare the financial statements? This question should come to your mind, right? So I have the same question to you. So what do you think? After how much time does a company prepare its financial statement? Is it after 1 week? That means every 1 week they prepare a new statement? Or is it after 1 month or 2 months or 1 year or after 2 years? So think about the question by yourself, and whatever answer you come up with, try to think about the logic. Okay. So I'll put the question here and I'll move on, and in the next part of the video you'll get the answer step by step. Okay. Good. So we'll start with the first assumption, the going concern assumption. Whenever a company or a business is established, it is assumed that the business will remain in operation for the foreseeable future. That means the business will run for an infinite amount of time. So it's logical, right? Suppose you started a business, so you don't have in mind that, okay, I started a business, I'll run the business for 1 year or 2 years. Most of the time you don't have. Most of the time you think that, okay, this business will run for a long period of time, and you exactly don't know how long it will run. So this is actually known as going concern. In the accounting, we assume that a business on which we are doing our accounting will run or will remain in operation for the foreseeable future. Right? So a business will be in place for a long period of time, and we don't know the expiry date of the business at the time we set up the business, right? Okay, this is the one assumption. But think about that. You assume that the business will not end in the future. It may run a long time in the future, right? So you are recording all the transactions happening. So you are waiting for the day the business will end. At that time, you will accumulate all the records you have on that business, and after that you will try to find out whether you have earned profit or loss, right? Or you will prepare your financial statements, whether you have earned profit or loss, whether you have got increase in your assets or liabilities, something like that. Does it sound logical? Actually, no, right? Because whenever you have set up a business, or whenever you have a business, you may feel the need to learn about how much profit you have generated, or how much asset you have increased or you have generated after a particular point of time. So what most of the business do, or what accounting does, the accountant, they divide the life of the business into artificial time period. So they don't wait for the business to end to prepare their statement. Rather, they divide the life of the business into some small category or a small period. That is known as time period assumption, dividing your life of the business into artificial time periods. We will have detailed discussion on that, so don't worry. With this, we move on from this slide. Now, the time period assumption we just talk about, right? So what it says that accountants, they divide the economic life of business into artificial time period. Suppose you see the timeline here. Here, some company may decide to choose a time period of 1 month. Some company may decide to choose a time period of 3 months. And some company may decide to choose a time period of 1 year. What does this mean? The first company or the first business, they may restart their accounting process after every 1 month, or they may prepare their accounting financial statements after every 1 month. Every 1 month they prepare financial statements. So in a year they prepare 12 financial statements. And different thing goes for the second company or the second business, right? The second business, they restart their accounting process. We will talk about the process in detail. Don't worry about that. Accounting process. They start their accounting process, restart their accounting process after every 3 months. And after every 3 months, they prepare their financial statements. They prepare income statement, owner security statement, balance sheet after 3 months. So they are doing it in that way. And there are another type of companies, or another company, it is preparing its financial statements after 1 year. So you can choose after how many times or how many months or how many days you want to prepare your statements, or you want to restart your accounting process. This is known as time period assumption. But normally it has been seen that generally company or business, they divide their time period into months, quarter or year. Okay. So we know that the company are free to choose which time period they want to follow, but it has been seen from the experience that most large companies, they prepare or they must prepare both quarterly and annual financial statements. That means there is rules and regulation that tells you that you must prepare your statement at least quarterly. Right? Quarterly means after 3 months. So you can choose to prepare a statement more than after every 1 month or 2 months, but you have to prepare statements at least after 3 months. That means in a year you have to prepare at least 4 statements. Okay, and at the end of the year, you merging the 4 statement, you prepare a annual financial statement. So this is the normal practice, and companies must have to do it. So if you suppose somebody have some share, bought some share of in a particular company. Suppose your father has bought some share. Just learn. You can learn about that. The company there, which share they have bought, they prepare their statement or they publish their statement after every 3 months. So if you want to know about how good the company is performing, you can check their financial statement after every 3 months. So this is how the normal course of things, normal way things are being done. Okay. So company may prepare the statements after 1 year, but they also prepare it quarterly, and this in the monthly and quarterly time periods are called as interim periods. Interim periods, right? Now, just think about that. A year, 12 months make a year. We all know that, right? So in our calendar, the year is like that. It starts with January 1 and the year ends on December 31. So suppose your company also have to prepare statements, and they also have to prepare statement every year. So do they have to follow the calendar year January 1 to December 31, which means that they will start their recording on January 1 and their recording process will end on January 31 of that particular year, and in the next year on January 1 they will start their accounting process newly, or new accounting process, right? Or again. Is it? Actually, no. The company can choose its year according to its choice. The year company maintained for their financial statements or for their accounting process may be different from your calendar year, and that year maintained by the company is known as fiscal year. Fiscal year will be 1 year in length, but the start day and the end date of that year will be maybe different. I'll make it clear to you with some example. Okay. So, most of the companies in Bangladesh, they follow January to December fiscal year. That means the calendar year, they follow the calendar year as their fiscal year. That means they also follow that. They also start their accounting process from January and they end their accounting process of that particular year in December 31. And there are also some company, they start their year, they start their accounting on July 1 and they end their accounting on June 30. So there are two types of, normally most of the company follow this either January to December or July to June fiscal year. So what you understand from that is that company's fiscal year may be same as the calendar year, and also it can be different from the calendar year. Okay, so just think about the government of Bangladesh. Government of Bangladesh, they have their income, they have their expenses, they have their assets, something like that, right? So they have to also prepare financial statements like that. So in their accounting recording process, what do you think? Which fiscal year does it follow? Can you guess? I'm making it simple for you. Do they follow, or does it follow January to December or July to June policy? Exactly. You guessed it right. The government of Bangladesh, they do not follow the calendar year as their fiscal year. Rather, in their accounting or in preparing their accounting records, they follow a year July to June policy. That means their accounting year starts with July 1 and their accounting year or accounting process year ends on June 30. So this is how the accounting is done by the government of our country, July to June. So whenever you learn about any budget, they don't say it like the budget of 2012, 2015, 2017. Rather, they say that budget of 2020-21, budget of 2019-20, something like that. Why? Because their fiscal year encompasses 2 years. It starts with the July of 1 year and it ends on June of another year. So this is how the accounting is done by our government, right? Okay. Having said that, I conclude my discussion of this video. Hope to see you soon, inshallah, and thank you for all your patience.